Hi there, this is Rob, and this is the overnight overview for Monday. I've turned off the clock because I got some important things to talk about today. Big news out of Cyprus over the weekend creates some interesting discussion points. But first, let's take a look at the odds sheet as it stood on Friday. As you see here, odds were basically flat across the board, with none of the major index securities posting compelling numbers. ES is what I generally focus on. Price action there was mildly bullish, seasonality was mildly bearish, and internals were mixed. This all combined for basically break-even odds, so there was no trade for me. But let's take a look at the strong action that occurred over the weekend. After closing at 1553.5 on Friday, ES futures started Sunday evening session nearly 10 points below there and quickly fell further. They continued south until Europe opened, which provided a little bit of a bounce back. Still, the gap down to open Monday morning was nearly 1% below Friday's close. For overnight traders, trading over the weekend adds an extra element of risk. A gap like we see between Friday's close and Sunday's open is one that's very rarely seen during the week. This is because during the week, futures trade nearly around the clock, with the longest break between 5:15 and 6 p.m. Eastern Time. So the chance of a news event occurring during that 45-minute window that would cause a large gap is fairly small. But when you have the market closed for 2 days, chances of a significant news event occurring increase greatly. So in the example this past weekend, if odds had looked better, then I may have taken a trade and looked to have set a stop and target. The standard stop, which is based on recent volatility, would have been about 5.5 points. That would have been blown through when futures resumed trading on Sunday. Of course, if it was a short trade, greater gains would have been realized than those targeted. Because of round-the-clock trading, this is highly unlikely to occur during the week. I also ran a study this morning to see how much more likely it is that a large gap occurs over a weekend. I looked at times when ES was trading above its 200-day moving average. 16 of the 59 times that ES had gapped down greater than 1% had come over a weekend. Gaps up of greater than 1% occurred 13 out of 49 times over the course of a weekend. This means that while about 20% of market days are Fridays, 27% of large gaps occur over a weekend. Traders not wanting to take this additional risk could either reduce position sizes or eliminate overnight trades altogether over the weekend. Personally, I have not made such an adjustment. Tests I ran a while back showed that trading the odds sheet straight up using Overnight Edge's standard minimum entry criteria, about 25% of total profits would have been realized on weekend trades. In general, weekends do carry more risk, but they also tend to offer more reward. Of course, it's up to the individual trader to decide the best way for them to handle the weekend trades. Thanks for listening, and rest easy.